Jamie here. Hope everyone's doing outstanding. Wednesday, July 30th, 9:04 a.m. on the second to last day of July. Talk really quick about the market. Some names I'm looking at go from there. S&P futures slightly in the green. Nasdaq's up about a tenth of a percent. Small caps are up 4/10%. Um, yeah, interesting. It's gonna be an interesting day. But I wouldn't call it one of the bigger days in the last couple months. But we have the Fed meeting. We just had GDP data come out hotter than expected. We had PCE data, which kind of we already had other inflation data, but came in a tad hotter than expected. It kind of canceled each other out. Um, and then we have the Fed. So you already have a couple minutes ago, you already have POTUS saying cut rates, cut rates. Just imagine the tirade that's going to happen around 2 o'clock today when the Fed decides not to cut rates. If they cut rates, there's going to be some major market volatility, a couple percent swings on either direction, right? Because I think there's still folks who think that the Fed should cut rates, you know, 0.75% or even 1% or more than that. And there's other folks on the other side of the fence who think the Fed might even have to start to raise rates if the um, economy gets too hot, right? Because too hot of an economy stokes inflation again. So there's all these different arguments to be made. I just know that, just my opinion. I shouldn't say I know. Nothing's 100% certain guarantee. If the Fed cuts rates today, it's gonna be spies me. It's maybe it goes to 640, maybe it goes down to 625. It's gonna be wild swings. All right, uh, that's kind of well today, and then also after the close big, right? Meta, Microsoft. It started last week with the earnings, right? And some of these names, Google was one of them. Google, you would think was people were already writing the obituary for Google, the ads, their ad business, which is pretty much how they've subsidized all the other initiatives they've done, and acquisitions. I mean, their YouTube, obviously. They pretty much wrote the obituary for Google, and then Google comes out and smashes estimates. You're like, wow. Not only is the don't write the grave form, you might have to make a statue and a monument form higher, right? Because great earnings, and it just couldn't find its footing. So yesterday, and there's other names that are good examples too, but Visa too, right? I mean, yeah, I'm sitting there trying to looking, of course, me, I look through my bear goggles. I want puts on Visa, and you watch it, and it's down to 340. I'm like, look at the numbers, like, oh, good numbers, decent news, and it's down here this morning. So one to watch here. Um, is this the start of a trend with some of these names? So after the close today, we'll see what happens with Microsoft and Meta. What are they going to need to do to beat estimates? And some of the sell-offs, or at least some of the pulls in those names, have been because of their capex spend, right? Billions of dollars. That'd be the headline. Meta spending all this on servers and AI and power and all that fun stuff. And then the market would say, oh, their capex spending out of control. And then on the flip side, they'd be like, oh, but they're behind on AI. So I think you got to like take the good with the bad. And we'll see if the market kind of how they parse those earnings after the close today. Are there gonna be negative reactions even on big beats and raises? So certainly gonna be an interesting day here today. I keep saying, and I'm not, I hate to be negative or down on the market because you know what, the market over time always goes up, right? That's just how it is. I mean, we're at all-time highs, cup 2 days ago, whatever. Uh, but you rewind 10 years ago and you could be spinning negative, and then 10 years later it's higher 3 months ago. So, but it just at some point there'll be a pull. I just don't want to be, I never want to try and be, I always say, caught with my pants down, right? So I don't have my bear suit on. I don't have my bull horns on either. I mean, can we head higher? Certainly. I'm in cautious mode, which means I keep selective and I'm open to kind of both sides of the trade. Um, and if we get pulls on some names, I'll look for some calls to play for upside, especially some of the small cap names. That's kind of how I'm doing it. To me, like I always, that the saying always goes like it's easier to fear people out of positions than into position, right? I mean, it's just easy. That's just how it's just how humanity how motions work, right? A fear is an emotion that can get people uh, take action. So I don't want to cause fear or panic, right? Because I don't. I mean, you look at all the stuff yesterday. You would have thought if I told you that the yields were tanking and the U.S. dollar strengthening, you would think it would be a monster day for stocks, and that wasn't the case. So hopefully this is with some bumps, markets can end the week on a high note. We can get through this week. Still some big stuff. And for some reason, I thought PCE data was tomorrow, but um, we still have the jobs report on Friday. And then we have to get to Fed chair, and then obviously Apple and Amazon on Thursday. I put on the watch list too, right? So Fed Chair Powell, it's almost like he has a script or like a blueprint for how he can cut rates and appease everybody, right? And to me, keep rates, don't cut rates this meeting. You have Jackson Hole at the end of August. That's where you're going to paint your picture. Give your vision of how we're going to get back into a cutting rhythm. What does that look like? And then now you set the stage for 100% probability of a rate cut, which is only 60% right now in September. And I think if you do that, it can appease both sides. So hopefully somehow this can get navigated between now and August. Markets can kind of hold their ground and we can be good to go. And also I posted that little historical too, like the second term of president's term. August is historically a very weak performing, only 3% on average to the downside. I mean, that's pretty massive for a month's performance. So hopefully that doesn't happen. All right, and then take a look at yields down big yesterday. Uh, the yield was down, let's see, a tenth of a percent, but 2% in regards to the yield percentage wise. And then the U.S. dollar back over its July highs, right? Oh my gosh, the U.S. dollar, fiat currency, horrible stuff. All right. All right. So that's overall markets. Now, just quick on some names. Frustrating day yesterday in regards to TTD and Roku. Again, I knew Spotify was reporting earnings. I did not think there was be some sympathy move, and I don't even know if that was the main reason for it. TTD was actually green after the open. It rallied into green, and then it just sold off. And same with Reddit too. So I'm like, is it because of Spotify? Is it their profits? And then on the flip side, then you start to look at some other names that would be dropping in sympathy, and Netflix wasn't. And only closed down 0.5% yesterday, but I think some of that's maybe the huge viewership of Happy Gilmore. I mean, its biggest viewership all time. I don't know if that's some of it mitigated some of the losses. Frustrating to say the least. So the plan, obviously, it started on Monday. The plan can't execute that plan, right? Lock some of those calls into cover costs, ride the rest, at least in regards to Roku. So I'll just hold those. Still have time. That's a good thing is I bought time on the Roku call. So if it does trade into the 120s in the next week or two, those calls will be some nice gainers. TTD, a different story. Inexpensive lottos will need some kind of catalyst for those to pay. Also, no, I mean, Google, Microsoft, Amazon, and well, even Meta too, will also give a little insight into ad spend. So could certainly still move TTD into the end of the week. So that's TTD. That's Roku. Just disappointing. And then Dexcom, right? So after kind of having a wound open and then a salt being poured in the wound yesterday morning, Dexcom was kind of hanging around $89, and considering their weekly strikes, the plan was to lock some of those weeklies in and roll them out to the monthlies. Didn't want to see the profits evaporate, or at least the position go to red. So I closed those out. They'll report after the close today. I'm bullish, right? I think it trades north of 95, but at the same token, I had the 105 strike, so I would need a large move, and then just don't know. So I don't know if I'll visit before the end of the day. I would disappointing if it does break and run, but it's a plan. Got to rash take the good and the bad. You can't fault yourself for having a plan. All right, so that's Dexcom. And then on the flip side, so yesterday when the market was showing kind of repeat patterns of Monday, you had the green open and then just a melt. I've said, instead of waiting for 633 to break on the SPY, I started getting some put hedges. I was looking at the three that I always look at: the ServiceNow, the Broadcom, the AMD, and then Broadcom looked expensive on a risk reward basis, so I went and got the AMD puts. Those were in the green, bounced up into the red and back into the green. It's gapping lower here this morning, 175. We'll see what the puts open up. If I can get out some to cover costs for 100%, I will, and I'll ride the rest. If the market's weak, I see it trade down to 160 before the tomorrow, the next day, but before the week is out. And then later in the afternoon, Broadcom, which, you take a look, huge. I mean, it's been on a massive run since the April lows, right? $140. And then you had gains being padded by the Google news last week, and it's been on a tear too, right in the upper Bollinger Band. Back when I traded the Broadcom puts back in March and April, same premise, right? It's going to be higher probably. It's going to be a higher stock in the next 12 to 18 months, but I think there's still an opportunity for a pull. You did have Morgan Stanley upgrading some price targets this morning, AMD and Broadcom, but I think it was just kind of like a sector-based price target raise. I don't think that'll impact much. And maybe it does. I don't know. But it's similar to AMD. If we do get some kind of pull, I think 280 comes pretty easily. And then I'll use opportunities to close those on the way down. And then ServiceNow, I'm still eyeing some positions. I was looking yesterday, the premiums are insane, but it's one of those names that you don't need a big move for the premiums to go nuts on top of insane premiums. So 940 puts maybe as a put hedge, depending on if things get crazy today. Who knows if they do. Last Fed meeting, it was almost like you wouldn't even know there was a Fed meeting, right? So if it's not, then I'll just kind of sit on my hands, but I'm going to be very selective. And then Visa, right? I'll be watching the open. If it does one of those similar setups to where it can't rally. It's at 344 here. I might see what the 335 puts look like, um, if it shows some weakness. I'm trying to think of some of the other things. Joby is all the way down to 1632 down. It's down 50 cents here this morning. It's only 14.95. That's kind of the spot I'd want to see hold, and then I'll look to get some more strikes. Still have the freebies with profit October strikes. So I'll just continue to hold those. I'm not gonna sit here and try and time it. Also, I posted an article. I don't know if I put it in here. Do I have it on the top? I think I do. Barron's had a nice little piece on M&A, right? So, I mean, it is funny. You kind of like hear a little bit more M&A the last couple days, right? And some of that in regards to in the biotech sector, you had the freight, right? You had that sector with what CSX to trains, whatever, and now it's like, is it going to heat up? And some of the thought process to me when the new administration was coming in is regulation, right? To me, that's a big sticking point when you have these companies who are worried about like legal costs, right? So when you do an acquisition and you say, hey, I'm going to buy XX company for this billions of dollars, it's not like the deal goes through tomorrow, right? There's all the fees you have to do. You have lawyers craft up all these contracts and stuff. And then you have to worry that the FTC or some other agency is going to come in and say, oh no, we're gonna look into this. This might be a monopoly. And then you have the time factor, you have the cost factor. So all these things weigh when your company's trying to make a buyout decision, right? And so when you have regulatory environments that are getting easier, right? You have to think the M&A environment would start to pick up, especially with markets at all-time highs. So it's kind of surprising, some of these companies you would think, hey, stocks were on discount back in 2022. M&A kind of took it on the chin at lows in April. M&A took it on the chin, and here we are at all-time highs. Did everybody miss the opportunity to buy cheap? I don't know. So hopefully that starts to heat up. They listed C3AI, one of those names I used to love back in the day. VKTX, Lyft, Zoom, DocuSign could be interesting, right? All right, let's have a great day, folks. I'll be back on audio later. Rock and roll.